Okay, in this session we're going to have a look at accruals and prepayments, and in this session in particular we're going to have a look at just accrued expenses. Now, if you remember from earlier sessions, an accrual is an expense due but not yet paid for. If you remember, the accruals concept states that we must recognise transactions when they occur, irrespective of when cash is received or paid. We've seen the accruals concept in action many times already. For example, a credit sale. As soon as you sell those goods to your customer, you recognise the sales revenue, that income, immediately. Remember, you don't wait for the customer to give you cash to record the income, you recognise it now. Same goes with credit purchases. You purchase goods from a supplier, you promise to pay your supplier later, you recognise the purchase's expense now, you don't recognise the expense when you ultimately pay for those goods. Now, in this session, we're going to be having a look at other types of expenses and other types of income where that accruals concept comes into play. In this session, like I've said, we're going to have a look at accrued expenses, and as I've already said, an accrued expense is an expense due but not paid or invoiced for as yet. Now, ultimately what we want to try and do is match all the income earned in the period to all the corresponding expenditure relating to generating that income. Ultimately, that will give us a year's worth of profit or loss. Now, you may have a situation where you have paid, let's say, your electricity expense all the way up to November in a year. Your year end is the 31st of December, but you haven't yet received your electricity bill for the month of December. Now, at the minute in your accounts you will have 11 months worth of expenditure. But what about the final month? Well, this is where that accruals adjustment is coming into play. It's an expense due. That expense of electricity does exist. You did consume electricity in the month of December, but you haven't received an invoice from the electricity company, nor have you paid it yet either. Now, what we have to do is a year-end adjustment called an accrual. And what we have to do is show that December expense and show a corresponding liability or obligation to pay that expense when we receive that invoice in the next accounting period. So let's have a look at this and have a look at the double entry. Now, the double entry would be, the debit would be to increase a relevant expense account and essentially recognise that expense in the month that you need to accrue for. So like I say in my example, the month of December. Now, your expense that you accrue for generally will be an estimate. That estimate will be based on either the last year's bill or a proportion of the bill that you've already received, but maybe it's been after the accounting period. Okay? So we're going to increase the expense account up and recognise that expense. But rather than crediting cash or bank or indeed payables, we're going to credit an account called accruals. And this is increasing a current liability in the statement of financial position. Okay, so we're recognising a form of a liability, an obligation to pay that expense, whatever it may be, in the next accounting period. Now, this all sounds fine, but again, you need an example to help you understand this a little bit better. So we're going to have a look at this double entry in more detail, and I'll explain it further if we have a look at our first example. So, We've got this example then. This is Mrs. Nelly. She's a sole trader specialising in selling yummy cupcakes. She set up her business on the 1st of February 2009. So that's going to be the start of her financial period. She receives her gas bills quarterly in arrears. Now, of course, gas is a form of expense or a running cost of the business. Quarterly in arrears, so at the end of every 3 months. So let's have a look and see what she's received and paid in terms of her gas bills. In the period ended the 31st of December 2009, the following bills were received and paid. On the 30th of April 2009, she received and paid a gas bill for $300. On the 31st of July 2009, she received and paid a gas bill for $310. And on the 31st of October 2009, she received and paid a gas bill for $300. So we can see then that they've paid, or she has received and paid gas bills for the months of February, March and April, because it's at the quarter ended. So she's paid for the first 3 months of her year. At the 31st of July 2009, she would have paid for May, June and July. And in her October bill that she received and paid, she would have paid for August, September's and October's gas expense. So we can see there we've got 9 months worth of expense that she's received and paid for. So continuing on then, it says required. What is the amount for gas expense to be shown in the statement of comprehensive income for the period ended the 31st of December 2009, Mrs. Nelly's first year of trading? Well, that's interesting, isn't it? She started her business on the 1st of February, and our first period end, or our financial period end, is the 31st of December 2009. So would you all agree then that her first year of trading spans 11 months, February through to December? Now remember, we've got 9 months worth of expense that we've received and paid, but she hasn't received her gas bill relating to November and December, okay, in this financial year. Now, of course, she would have consumed gas, you know, she would have looked at her gas meter, she would have seen that she would have been using gas in order to operate a business, but she hasn't received an invoice yet, or indeed paid anything towards that gas that she has consumed already. So we're going to have to create an expense with that respect in order to cover the final 2 months of the year that no expense has currently been recognised for. So it's best illustrated then by looking at a timeline first, and then we'll proceed to answer this question. So what I've done here then is I've drew up a timeline noting those key dates within the financial year. So we've got the year start of the 1st of February 2009, and at the end of the timeline we'll have the 31st of December 2009, her year end. With this sort of transaction, with this sort of year-end adjustment, you must make a note in the exam question of the year-end date, the cut-off point. Very, very important. Now we said then, and I've noted all these key dates that we've been given in the scenario on this timeline. You can see that our first bill that she received was on the 30th of April, and she received an amount of $300 on invoice for the gas bill that she has received and paid. and that covers those 3 months from the 1st of February 09. Okay, so remember how I said that would have covered February, March and April. Now, if she's received and paid that gas bill, do you think you'd be able to remember what the double entry would be? It's one of our very first sessions, remember, on double entry bookkeeping. We're going to debit and increase gas expense account. And then if she's received and paid the gas bill, of course, she's going to credit and reduce her bank asset in the SFP. Okay, so that's what she would have done with that gas bill because she's received and paid it. Now, on the 31st of July 09, she received and paid a gas bill for $310 from the scenario. And again, as we already mentioned, that would have covered the period May, June and July. And again, she's covered those 3 months ended. So again, we've got those 6 months worth of expense so far. And the double entry would be exactly the same again. Debit gas expense, credit bank, but this time for the tune of $310. We go into October 09. We see then that she received and paid a gas bill of $300 again. And because that is a bill that she receives in arrears at the end of the 3 months, that would have covered August, September and October. And again, that double entry be the same because you paid cash for that expense. Now, we don't have any more information about the gas bill, but there is a time lag, isn't there? There is a period of time between the 1st of November and the 31st of December, so 2 months, when no gas bill has been received or paid, but within that 2 month period, she would have consumed the gas, and therefore she would be due to pay something. Just so happens that the gas board hasn't yet issued an invoice for her to pay. Now, in these 2 months, what we must do is what we call an accrual adjustment. We must accrue for that expense, recognise that expense now, even though we haven't paid any cash yet. So, at the year end then, we are going to have to do an accrued expense adjustment to cover 2 months. Okay, so to cover that bit, in order for us to get an entire period's worth of expense. So, the first thing we need to establish then is how much we're going to have to accrue for. Well, usually when we prepare financial statements, usually there's a couple of months after this year-end date that we have to prepare these financial statements. The financial statements just don't get magically put together on the year-end date. It does take a few months just to collate all the information and present it. So when you're estimating an accrual, you can do one of two things. You can either use the latest bill that you've received as a best estimate of the accrued expense, or within the time period that you're actually finalising your accounts after this year end, you may indeed receive that bill relating to that 2 months, and therefore you could get a more accurate picture of the expense. We don't have that information in this question, so we're going to use the latest bill as a best guess or a best estimate of that accrual that we need to make. So let's have a look then at calculating our accrual adjustment. So we're going to use the latest bill to estimate it. Now the latest bill was the value of $300. It was the most up-to-date information that we have relating to the gas expense. That $300 relates to 3 months of the year. And how many months do I want to estimate an expense for? Well, if you remember, it's for the final 2 months of the year. So of course then the accrual adjustment will be for $200. And that's going to give us a complete view of our gas expense, which we can then match to the complete view of all the sales income and other income that Mrs. Nelly generates from selling her cupcakes. Now, when we do our accrual adjustment, we need to do a double entry for it. So our journal. Well, what we're trying to do is recognise an expense in the accounting period. So what we must do is increase the gas expense account with that $200 accrual expense that I want to recognise now. And again, it's perfectly fine to use an estimate. The credit then wouldn't go to banks. We haven't paid the cash just yet, but we need to recognise that we will have to pay cash for it in the next period. As a result, the credit will go to increase an account called accruals, which remember I said was a liability in the SFP, and we're going to show our liability at $200. Okay. Now, of course, what they want us to do in this question is to show the amount for gas expense to be shown in the statement of comprehensive income for the period ended December 2009. And as a result, then we need to do the ledger accounts in order to find that out. So let's open up a gas expense ledger account and let's see if we can complete this for the year based on the journals that we saw in the timeline and our accrued expense journal. So I want to pop some dates in here as well just to make sure we're happy with what we're trying to do. On the 30th of April, from the bank, we paid a gas expense of $300. On the 31st of July, again from the bank, we paid an expense for gas of $310. Remember, this is nothing new. This is what you would have seen in the double entry bookkeeping session earlier. On the 31st of October, again a payment from the bank, nice round 300, relates to the 3 months prior to that amount, that date. So all fairly standard. Now what we need to do is do our journal entry for the accrual. Now an accrual, remember, is always a year-end adjustment, so an accrual will always be on the year-end date, the 31st of December. And what we're going to do is we're going to call this accrual carry forward. In other words, closing accrual. Let's write that down. Closing accrual. Remember, expense due, not yet paid for. That's what an accrual is. So our closing accrual then, we estimated at $200. Okay. Now that's the debit entry for the accrual. We're going to do the credit entry for the accrual, so we're going to need to open up an accruals current liability account. So as you can see then, I've drew up a T account called accruals. It's an SFP account. Remember, it is a current liability. We will need to pay that gas expense early in the next accounting period. On the 31st of December, we've got an accrual carry forward of $200 that appears on the credit side. Now, that's it really in terms of an accrued expense. We've done all the double entry postings. Now let's see the impact on the SOCI for the gas expense for the year and also in terms of the liability. So, at the 31st of December 2009, balance carry forward on the accruals ledger is $200 on the debit side. So on the 1st of January 2010, we will have a balance brought forward, or an opening balance of $200. Okay, so that will be our liability at the end of December 2009, and then we'll start with an opening liability at the start of January 2010. In terms of the expense account, we can balance this off now. So that's going to take us to 1,110, which means the credit side has to equal 1,110. And remember, from now on, any income or expense ledger accounts, there is no carry forward or bring forward. You just clear it out to the statement of comprehensive income as the expense for the year. So, expense for the year to the statement of comprehensive income, we are recognising an entire 11 months worth of expense for $1,110. And that would be debited to your statement of comprehensive income to reduce your profits accordingly. Okay. So what we've done there is we have dealt with a closing accrual adjustment. Now, let me extend this example on a little bit further now that we've done that. What happens next year? Well, what I'd like you to do is write down this next slide that's appearing on your screen now. This is just an extra bit I'm going to add on to this Mrs. Nelly example. So I've put on here, say, on the 1st of January 2010, Mrs. Nelly receives and pays a gas bill for $340 relating to the period ended the 31st of December 2009. Pause the recording whilst you take that down if you wish. Now, looking at the next accounting period then, we've now received the gas bill for the 2 months that we already accrued for in the last financial year end in December 2009. We now know that for those 2 months, we need to pay $340 in relation to that. Now, at the start of the next year, if you have a closing accrual that you recognised last year, it will now become an opening accrual, just as we saw in the accruals ledger account here. Okay, so we have that opening accrual. So let's write that down. On the first day of the next accounting period, what we must do is reverse that accrual back into the gas expense account. Okay, so what we're going to do on the 1st of January 2010 is we're going to do a reversal of the opening accrual and debit it out to clear it. Stay with me, it might sound puzzling right now. Okay. So on the first day of the next period, reverse that opening accrual out and debit it out of the accruals account. What you'll see then is the liability has now been cleared. What you then do is go up to your gas expense ledger account, which we prepared earlier, and we closed off for the December 2009 period end. And what we're going to do is on the 1st of January 2010, we're doing the reversal of that opening accrual of $200 from the accruals account. Okay, so a closing accrual is a year-end adjustment. You're then going to do a reversal of the opening accrual on the start of the next accounting period. Now, the reason why I'm doing this, the reason why we've done that double entry, debiting accruals, credit the gas bill. Well, this makes life easier when you come to post that amount that we've paid for. Okay? So in the next year we paid $340 for gas relating to those final 2 months of the last year. Now remember, normally the double entry would be debit gas expense $340 and credit bank if you've paid it straight away. Okay, normal double entry for that transaction. Now, ignoring the banks, we all know how to prepare a bank account now. If we go back up to the gas expense account, and on the 4th of January 2010, from the bank, we paid $340. Can you see that of that $340, we already expensed $200 of that in last year's accounts? Okay, take a look at the entire account. Of that $340 that relates to November and December last year, we already expensed $200. Okay. Now, of course, we underestimated a little bit, but that's fine. So, $200 of that $340 has already been charged to last year's accounts as an expense. If then we do our expense for the year to the SOCI this time, the balancing figure will only be $140. And can you see then, by reversing that opening accrual from the 2009 accounts, you're ensuring that you don't over-expense or overcharge your statement of comprehensive income with too much gas expense in the next year. Okay, so in conclusion then, what you must remember is that a closing accrual will increase your expense account in the current year. The credit entry will go to accruals, and that will be a current liability in the statement of financial position. At the start of the next period, that opening accruals liability will be debited out and then credited to reduce the expense in the next accounting period, to ensure that we are not charging the same expense twice over. Okay, so you can short circuit this a little bit. You can say a closing accrual is a debit, and that's why I've called it accrual carry forward, because then the accrual brought forward goes on to the credit side of the expense account, which is the reversal. So just to give you a few steps to think about them, because we have now answered the question. The expense for the year is 1,110. But just when dealing with accruals, step 1 is to post the cash. Step 2 is to calculate and record the closing accrual using the double entry that we said at the start of this session. Step 3, reverse the accrual at the start of the next accounting period. In other words, debit accruals and credit the relevant expense account. Okay, and if you deal with that, you can't go far wrong with accrued expenses. Thank you.